It was 1 year ago today that stocks plunged to a 12-year low. Remember that? No, we don't want to. But Wall Street has bounced back with the market regaining more than 60% of its losses. So what does that mean to you, and how can you take advantage of this trend? Here to tell us is Jill Schlesinger. She is editor-at-large for CBSMoneyWatch.com. Hi, Jill.
Good morning.
So we were joking a little bit earlier that we're psychic and we know what's going to happen with the stock market. But actually, you were here a year ago on that fateful day, and you made a prediction. I remember it well. You said everything's going to be okay. And you were right.
Yeah, let's look at this. A year later, the Dow Jones Industrial Average is up over 61%. By the way, that is the best 1 year since the Depression, the best 12 months. NASDAQ up 83%, S&P up 68%.
The Dow closed at just over 6,000 a year ago, and yesterday?
6,500 a year ago, 10,500-ish. And so I really want to point out one thing that's a little scary. The S&P 500 is still at the same level as 1998. We still are 27% below where we were in 2007. So we've made a lot of ground up, but still got a ways to go.
So what sectors of the economy did you see recover most in the last year?
What's really interesting is that we saw business services, and that's like publishing and advertising, consulting. We also saw the media business, thankfully for us, of about 140%.
Like that?
Look at financial services, 155%. Now you might say, wow, that's pretty amazing.
What's financial services exactly?
Well, kind of like all those taxpayer bailout companies, the banks, the mutual fund companies, the big insurance companies. 155% to me, that's pretty amazing. That did happen very much on the backs of taxpayers.
That's what I was going to say. A lot of people might say, well, good for them, they're up, but how has that helped me?
Well, I'll tell you how it has helped, because the reality is, unless the financial system was stable and those banks were secure, we would never be at this place. So I know it sort of stinks on one hand, but on the other hand, we are happy a year later that things have stabilized.
We need those companies to be doing well for the economy to be doing well, is the point.
Exactly.
What about 401ks? A year ago, nobody wanted to look because they were down so much. Have they recovered?
Well, look at this. We talked to some folks at Fidelity who pulled some research for us. At the end of March, the average 401k balance at $47,000. Then at the end of December, $64,000. Now, part of that had to do with us putting more money in, but that's also a sign of confidence. Part of it was market growth. Those are really good numbers. We're happy to see that trend.
All right. So what's your best advice? What should we be doing to take advantage of this trend?
Okay, number one, look at the last year. Don't get emotional. It's never as good or as bad as you think it's going to be. And one way to guard against your emotions and not fall prey to fear or to greed is to take a risk assessment questionnaire. Figure out what you need to do. How did you feel during this move? What kind of portfolio? And Maggie,
where do you find that risk assessment quiz?
This is the easiest thing. Go to your 401k plan provider, any mutual fund company. You go take a test. It said, how did you feel at the bottom? How are you feeling now? When do you need your money? Those questions help you create a diversified portfolio. You know, I'm a broken record.
Yes.
And everyone comes on and says, diversified portfolio. This works. By the way, in the decade of 2000 to 2009, a diversified portfolio, stocks and bonds, beat all stocks. So don't be a hero. Get a good night's sleep. Don't panic. Don't fall prey to your emotions. Chill out. And a year from now, we might be having another conversation like this.
All right. Thank you. And you said we should look at some samples of diversified portfolios, which we want to let everybody know that you can do on MoneyWatch.com. You can also get more of Jill's financial advice on that website. Again, it's CBSMoneyWatch.com.